Welcome to Talk Tickers. Today, we're digging into the latest from Box, and honestly, it's a fascinating one. You've got this big, bold AI story on one hand, and on the other, the market is just staring at the bottom line. It's a real clash, and it created a ton of confusion. So, let's break it down and see what's really happening.
So, right out of the gate, the headline numbers were, well, a bit of a mixed bag. On one side, you've got a beat on revenue, which, is always good to see. But then you look at the other side, the earnings per share, and that was a miss. And let me tell you, in this market, profitability is everything. That miss is what really grabbed everyone's attention.
And yeah, the market did not take that earnings miss lightly. The reaction was swift, and it was pretty clear. The stock dropped over 5% in after-hours trading. It just goes to show you how little patience investors have right now for any hint of weakness on the profit line.
So this really gets to the heart of it, doesn't it? You've got a revenue beat, you have all this buzz about AI, so what gives? Why did the stock get hammered? To really get it, you have to understand the two very different stories that were told. Let's start with the bull case, the story that management was pushing on the call.
All right, so first up, management's bull case, the AI transformation story. This is what the company wants you to focus on. They're trying to shift the narrative from Box being just, a cloud storage locker to it being a critical piece of infrastructure for enterprise AI, a huge pivot.
So to back up this grand AI vision, management basically tried to say, hey, don't look at the EPS miss, look over here. They pointed to these forward-looking metrics, things like RPO growth at 18% and billings growth at 12%. These are basically indicators of future business that's already locked in. They also highlighted a net retention rate of 104%. That's a key one. It means their existing customers are actually spending more money, which is exactly what you want to see.
And this quote from the CEO, Aaron Levy, pretty much nails their whole pitch. He's saying, look, all these cool new AI models are useless without good, clean, secure data. And where's that data going to live? In Box, of course. They want to be the central, trusted hub, the single source of truth that every company's AI strategy plugs into.
And hey, this isn't just some vague, futuristic idea. They're actually rolling out new AI products to make it happen. We're talking about tools that can automatically suck key data out of contracts or create these smart workflows that handle complex tasks all on their own. This is the stuff they hope will get big companies to open up their wallets.
Okay, so that's the rosy picture from management, right? The big AI transformation. But the market just wasn't buying it. Not at all. For all the talk about AI, investors just kept coming back to one thing, the bottom line. And that's where this whole bull case starts to wobble.
And here's the number that really just stopped the music. Non-GAAP earnings per share fell 31% year over year. Think about that, from 45 cents down to 31 cents. In this kind of market, a profit drop that steep, well, it's a huge red flag. It's the kind of thing that makes investors hit the sell button first and ask questions later.
Now, management was quick to jump in and say, whoa, hold on, it's not what it looks like. They explained this was all due to something called a deferred tax expense, which is basically a non-cash accounting thing that happens once you start being consistently profitable. It's complicated. But honestly, in a nervous market, that kind of nuance just goes right out the window. All investors saw was that big, ugly 31% drop in profit. And that was that. Okay, so let's talk about guidance in investor context, because it wasn't just the earnings miss that spooked people. What the company said about the future and the broader context of how the stock's been doing really added to the concerns. So you look at their forecast, and the revenue guide was, okay, largely in line with what everyone was expecting. But the full-year earnings guidance, it came in just a hair below what the street wanted. We're talking about maybe a penny or two. But again, in this environment, even a tiny miss on future profits is like throwing gasoline on a fire. And this just perfectly captures the mood of the market right now. It is all about profit momentum. For a company like Box, which, let's be honest, isn't some crazy hypergrowth story, you just can't afford to guide down on profits. Any revision, no matter how small, is going to get punished, period.
And this right here really paints the picture. Over the last year, Box is down 14%, while the S&P 500 is up 20%. So you're already starting from a position of weakness. When you're underperforming that badly, you have zero room for error. Investors just don't have the patience for excuses or complicated stories. They want clean, simple beats.
So, putting it all together, what's our take? Where does Box go from here? Let's get to the next call, our prediction for what's coming.
Okay, so here's our call. We're putting a market perform rating on the stock.
And the thesis is pretty straightforward. We think the AI story is actually credible. It could be a real game changer for them. But it's now in a race. It has to generate real bottom-line growth, fast enough to offset these ugly accounting headwinds from the tax expense. So for the next quarter, the number I'm watching like a hawk is that net retention rate. If they can keep that above 104%, or even better if it starts ticking up, that'll be the first real proof that this whole AI strategy is more than just a story.
And of course, as always, remember this is not financial advice.